lot of fun.
Good stuff.
All right, so wanted to have you on today to discuss the recently announced and I guess filed the plan to reform income taxes in general in the state of Mississippi. You, of course, serve as chair of the Senate Finance Committee. So if you'd like, why don't we start out, Senator, just with a brief overview of the bill and what it does, the key provisions.
That sounds good. Well, let me go back to 2016 and talk about the tax cut we did when then Lieutenant Governor Reeves and Speaker Gunn were running the House and Senate, respectively. We passed about a $420 million tax cut bill that phased out the 3% tax bracket on the first $5,000 of taxable income. That means above your standard deductions and exemptions that you're allowed on the state level.
Yep.
And then it also allowed for a self-employment tax deduction, which they allow on the federal level. We did it on the state level. And then we also phased out the franchise tax over a 10-year period. Well, that was passed in 2016. Where we are today is we have finally, in 21, we phased out the last part of the 3% tax bracket. And we are in year 4 of 10 of phasing out the franchise tax.
Okay.
So that is the biggest portion of that tax cut was the franchise tax.
By the way, if you don't mind me interrupting,
go ahead.
The worst tax ever devised.
Devised, yes.
Go ahead.
Tax on investment, tax on capital.
Talk about the franchise tax.
Absolutely.
The worst tax ever created.
And that took some thought, didn't
it?
Yeah. And that was about $300 million. That portion alone of that tax cut. So the biggest portion of the biggest tax cut in our state's history, we are year 4 of 10 of implementing.
Okay.
So come to today, and we have proposed a tax plan in the Senate that, when fully implemented in 4 years, will cut almost $20 million of recurring revenue and add a $131 million tax rebate. So the total relief package is about $460 million. It does it in 4 years. It will be fully implemented before the 2016 tax cut's fully implemented.
Okay.
So what we've done in our plan is we've taken the grocery tax from 7% to 5%. We've gotten out of the car tag business, and there are no general fund revenues that come to the state from car tags. This is all local ad valorem. There are, some fees that went to the state. They're no longer going to go to the state anymore, of about $13 million. And then we phase out the 4% tax bracket over 4 years. So if this bill were to be signed into law starting July 1, you would have immediate 7 to 5% on your grocery tax, and then calendar year 23 would be the first year of a 4-year phase out of the 4% tax bracket. Total about $316 million in recurring revenue, and there are no triggers. There are no increases in sales tax or excise taxes. It's just a simple plan that you go forward, and it's pretty much that's it. The rebate portion of it is about $131 million. So for any resident tax filer, you're a resident of the state, you file personal income tax in Mississippi, and you actually had a liability to the state, meaning you owed taxes and you paid them to the state, you would receive a rebate of up to 5% of what you paid with a minimum of $100, and it capped at $1,000. And that's estimated to cost around $131 million.
What's the formula for that? Do you know, Senator? My understanding is it's 5%.
5% of what you paid to the state.
Your tax liability.
Correct. And it would be a minimum of $100. So if you paid $75 in tax, you would get a minimum of $100. And then it goes up to $1,000. It's capped at $1,000 per filer.
Okay, so to get the full $1,000, you would need to have a 2020 tax liability of $20,000.
Correct.
Yeah. So you'd have to have a taxable income in the $350,000 to $400,000 range, something
Correct.
like that. Okay. All right, continue. So that's the main provisions there.
That's the main provisions of it, and it's with tax policy, there are a lot of levers to pull.
Yeah.
There's the grocery tax, there's car tags, there's income tax, there's corporate income tax, there's franchise tax. I mean, all these different levers that we are pulling. But what I would say to your listeners and everybody is you can't look at these things individually. Sure, Texas doesn't have an income tax, but nobody wants to pay Texas property taxes.
Yeah.
I got a sister that lives in Texas, 3,500 square foot house, paying $16,000 a year property taxes on it.
Yeah.
That's a lot of money. So people want to pick and choose what they like about different states, but when you look at their total tax policy, it tells a different story. Yes, you pay more property taxes. You also pay sales tax on a lot of other services. South Dakota does not have an income tax, but they charge sales tax on 126 different services. I think Mississippi's in the 60, 70 range on the number of services that have sales tax on them. So, it's a difference. Each state has a different way of getting the revenue they get. Property taxes are higher in Tennessee. They don't have an income tax. Some states have gross receipts tax on corporate entities. So there's a way that they're getting the revenue. I mean, Florida, for goodness sakes, they tax leases. They tax when you rentals. They tax real estate transactions. So every time you transfer title, there's a tax you pay on it. So each state has a different way. Florida uses their tourism more to their advantage, but that's kind of the gist of what we're looking at in Mississippi.
Yeah. So I know you're familiar with the House bill, which, of course, is it's more aggressive in terms of reductions of the income tax, reduction in the grocery tax. It does layer on an additional 1.5% on the general sales tax, does reduce car tax more. So overall, it is more in terms of the cuts. What concerns do you have about that?
Well, we're gonna start looking at we'll file our bill, has a deadline of I think February 25th maybe, I think February 25th is a deadline to get the Senate revenue bills and appropriations out off the floor. Yeah. So that's when a deadline. We'll have our bill up before then, and then we'll start to take a look at all the House bills and the House tax plan. The bill has come over. I've been working on our plan with Elbow and the Department of Revenue and the state economist, and what the concern that I have on any plan, no matter what plan you do, is at the end of the day you have a budget that we have the responsibility of funding. We have to, we have priorities. I think you've seen demonstrated already this session. Already we've increased spending year over year, recurring revenue, recurring expenditures of $220 million just on a teacher pay raise. Yeah. So both chambers overwhelmingly, I don't know if there was a single no vote in the Senate, voted to increase teacher pay by $220 million. That means that's a priority that we have set, that it'll be $220 million next year. It'll be $220 million the next year, and so forth. So we've increased the spending in government already by $220 million. And there's other things that we have in front of us. Our health insurance, we are going to see an increase in health insurance coming up. SEC squared, the state pay plan, is going to probably require a little additional money. So there's other spending that's probably going to need to be recognized in our number. So once we get the number of dollars that we're going to have to spend recurring expenditures, we need to make sure that we have recurring revenue to match. And what we have weaned ourselves off of, and since I've been here, this is the 11th year, we tried to wean ourselves off of using one-time money for recurring expenses. We don't want to use a lawsuit to help make payroll. We don't want to use, one-time money, whether it's growth or whatever, to basically use to fund our budget. We want to use recurring revenues to pay recurring expenses. And I think we've been fiscally disciplined over the last 10, 11 years that we've done that. We've achieved that. And I want to make sure that the budget we put forth is a responsible budget that addresses our priorities, and we have the revenue to do it. And based on our plan, based on the projections that we have, and we've used historical numbers, our plan does this.
Okay. All right. You can stay around.
Absolutely.
Yeah, we got Senator Josh Harkins in the studio, and we're talking about the tax reform plan that the Senate has offered. And when we come back, we'll get into a little bit more of the differences in the plan and just other concerns the senator has about the House plan as well. Stay with us. This is back. Senator Josh Harkins is our guest. The senator serves as the Finance Committee chairman. All right, so we're just talking about the income tax proposal by the Senate. So with your proposal, with the Senate's proposal, as you've explained, you've actually extended that out at least for 5 years.
Correct.
What the impact would be on revenue to the state. And you're using historical trends in doing that, historical trends in terms of spending increases, year over year spending increases as a percent of the prior year. and just also adjustments to revenue consistent with prior history.
Correct.
Is that accurate? Okay.
Yes.
All right. So have we seen that on the House side?
Not yet.
All right. Because I've got the fiscal note from the LBO that, of course, analyzes the House bill, but it's only for 2 years. Do you think we'll see? I know you can't speak for the House, but might we see that from the House side?
We will ask LBO to present, and I mean that's something that will be something we'll look at. Absolutely. I mean, I think that's one thing we tried to do is our plan is a 4-year implementation, and we've run out a 5-year pro forma on it.
Yeah.
And used historical trends, but I think obviously the concern we have is this day and age, the environment we're living in is not a normal economic environment.
Sure.
The helicopter money, as you put it, is abundant, and we recognize that. And you look at from a historical perspective, since 2005, since Katrina hit, we've had at least 3 or 4 major infusions of federal money into the state. And what's happened after that, at least after Katrina, we had a couple years of negative 4% growth. We've had ups and downs, and so what we try to do is use a historical reference, an average of what year-over-year revenue growth looks like, and that's around 2.6%. And then spending, inflationary and spending to keep government kind of flat, not necessarily growing government, but to keep it flat is about 1.6%. Okay. So that's what we used in our numbers, and we ran it out 5 years through the implementation of our plan, and every year the numbers kind of worked out, and we have room for that dip that we feel like is coming. And I think everybody, at Elbow and at Department of Revenue and our state economists have all said that it's coming. We just not necessarily sure when.
Okay. So let's go through the numbers, just kind of a typical case. So once fully implemented, let's think about that. Let's look at it from that perspective. And the reason I say fully implemented because the income tax, the elimination of the 4% bracket occurs over 4 years.
Correct.
It's 1% per year. Mm-hmm. And that tax, that 4% is levied on the second tranche of $5,000 of taxable income. So once fully implemented, it amounts to $200 a year.
Correct.
All right.
So per filer.
Per filer.
Yes.
Right. Yes. Thank you. Yes. So we got that, and then we've got the state portion of car tags. Mm-hmm. I've heard from $5 to $15. What's the true number there?
It's probably around $5 because the other part of that fee goes to the trauma fund.
Okay.
And part of it goes to MDOT for road and bridge, and then the other part of it goes to the state. So the state never really collected a whole lot on tags.
Right.
It's mostly made up of ad valorem from county.
From counties.
And so we're just saying that the state's not going to collect any revenues from car tags.
All right. So $5 there, $200 on the income tax, $5 there, and then the other reduction is 7% to 5% on groceries, and that's consumables, right? Is what that applies.
Prepared foods.
Prepared foods.
Yes.
Okay. Got you.
So things like paper towels, stuff you
That's
already
what
pay.
I mean. Yeah. Thank you. Thank you for clarifying that. All right. So, let's just kind of say the average household spends $10,000 a year on that, and it could be less, could be more, but that's $200.
Depends on how hungry you are.
Yeah. A lot of people are making that decision. Do I eat out? And that's getting more expensive, so they're buying, I would say, starting to eat inside and prepare meals at home more. But 2%, so you got $200 there, and I'm just estimating. It could be higher, it could be lower. The $200 on income taxes, that is not an estimate. That's just mathematical fact there. And then $5 on the car tax. So possibility, on average, $405 a year to the average taxpayer is about what that. So to those, Senator, that would say that's really not cutting my taxes a whole lot, $400 a year, what would you say? Because I know you've got to balance that with, okay, how do we fund the operations of the government?
Correct. I mean, look, it's I would love to have, as much income as I possibly could, but, I also have the responsibility, like we talked about, having to fund, make a budget year over year and not wreck the budget. I mean, I think you've seen demonstrated that both sides equally feel that it's important to raise the pay of teachers. It's important to do some of the things that we have to do to basically stay out of federal lawsuits, which we are currently under a couple right now for child protective services, mental health, trying to stay out of one for corrections. I think people feel pretty strongly that we need to lock up criminals and deal with that. through our Department of Public Safety, our DAs, all these things that keep law and order. That's a priority for Mississippians, I would say, as a whole. Education is important. So there are fundamental things that we are required to do, and we feel it's important to do. And you have to balance that with what do you have left to give back to people. We're trying to give as much back and be responsible about it. Now, what this plan does is it does not prevent us from coming back in 3 or 4 years and going, hey, we're in a good position. We can also put in place some more tax relief.
Yeah.
I mean, that's the beautiful thing about this is it doesn't preclude us from cutting taxes again. And most states around the country that you see, they've all taken bites at the apple. Nobody has set a ship off to sail to never return to eliminate income tax. They've done it in tranches. They've done it in bites. North Carolina, I think Louisiana just did something. Arizona, a lot of these states have done that. They have phased in income tax elimination over periods of time and through different measures. And so, we just the tax cut in 2016, the biggest part of that addressed the business community. This is geared more towards personal income tax. It's something that you have to just basically, I think it's prudent and it's responsible, and it doesn't preclude us from coming back in 2 or 3 years and making another stab at it.
Yeah. So at this point, we should also point out that the time frame, I should say, for taking up bills from the other chamber, revenue bills in particular, it's sometime out in March.
It's way out. Yeah, it's in March. I mean, what we were under right now is a deadline, I think, of Thursday to take up general bills that originate in your own house. So all the Senate bills, general bills that originate in the Senate, the deadline is to get them off the floor by this Thursday.
Okay.
And then we'll work on Senate appropriation and revenue bills up until the 25th. And after the 25th, we take up the House general bills. And then there's a deadline for that. And then after that, the deadline for House appropriation and revenue bills.
Okay.
So there's time. I mean, there's a lot of time to sit here and work through these issues.
Would you be willing to hazard a guess, an estimation on how the House bill would fare in committee in the Senate and the Senate bill would fare in committee in the House? There's a pretty big gap between those two.
I imagine both bills will be replaced with their own version in both sides, and that means it'll go to conference.
Yeah.
I think that there's just a lot of things. And look, I mean, we got to see what all expenses the House and the Senate feel are, a priority, and get through that too. I mean, I think, ultimately when you make a budget, you got to have buy-in on both sides. There's a lot of levers that have to be pulled to get to a final bill, where it's tax relief, whether it's appropriations, spending, where we can save money. So there's a lot of the road left to travel down.
I'm not intimately familiar with the LBO's methodology and process, but one thing I always wonder about that I've discussed with respect to any sorts of plans like this that address the revenue component of state operations is the macroeconomy. Mm-hmm. And I saw Bank of America this morning predicting 7 rate hikes this year, with a 50 basis point hike in March. You've got other economists that are predicting the possibility of the R word, a recession, late 22, 23. I'm just curious if that's factored in anywhere into these models.
Well,
the possibility.
Yeah, I mean, we've talked about that, and I think if you'll look at the 5-year plan I showed you, I mean, every one of these models that the pro forma we've done every year, there's a 2% set aside still left over and a little cushion.
Okay.
So we've got room in that number to weather a little bit of a downturn.
Okay.
But look, we can't predict the future.
I agree.
I mean, if that was the case, there'd be a line going to the casinos all across the state.
I hear you. I think
it does take that into consideration. And that's the part about we're trying to be responsible, because the worst thing we could position we'd be in is having to stand up in front of the body and go, hey, guys and girls, I messed this up. We don't have the money to do this. We're either going to have to make some drastic cuts, or we're going to, there's 2 options. You either make drastic cuts or you raise revenue.
Yeah, I agree. It really is pretty simple. I've made that same analysis of Social Security and Medicare. It comes up, look, it's real easy. You have more coming in or less going out, or a combination of the two somewhere to make it work. But, Senator, really appreciate you coming in today and giving us a rundown, a breakdown of that legislation, and we'll just look forward to seeing where all that goes. I know we'll be talking more.
Well, thank you, Gerard. I appreciate you having me on.
You got it. Senator Josh Harkins, chairman of the Senate Finance Committee.